or come off of mute and talk a bit about it? Who we got? Who we got? Who we got? All right, what's going on, Dow?
Yeah, down.
Hey, the primary thing I remember is we don't respond to the news or what's going on. We respond based on how the market, or we move based on how the market responds.
Absolutely, absolutely. Yes, that's very, very key. I gave the analogy about, watching when a child falls, right? Instead of potentially reacting to the fall, like it's potentially better for us to wait until they see, or what their reaction is, right? And then go based off of that. So that's really good there. Let's give it up for Dow, guys. Great, great, great. Um, Michelle Knight said, "We don't panic, we pivot." That's obviously definitely our motto here. So I'm glad we're sticking to that as well. Really, really good stuff. All right, guys. So today we're gonna be again going and looking at the chart here. I want to show you guys some patterns that we're continually seeing. We're going to be talking about trend lines today. Okay, we're going to be talking about trend lines, how they impact the market, how they allow us to potentially see um, see some opportunities for us to take advantage of pertaining to our entries in the market. All right, I'm going to go ahead and share my screen here in just a second. All right, I'm going to do it like this. Okay, can you guys see my screen?
Yep, we see.
Yes, go Tracy.
Excellent, excellent. All right, so here, guys, we have the idea of trend lines, okay? And when we look at trend lines, we're essentially looking to see what information has become relevant over a larger period of time. What can we make concerted efforts in watching price action and how it can interact with the
Hey,
market?
how are you? Good to see you.
I'm currently
Wait, so
looking at what am I looking at here? I'm looking at the Tesla chart, okay? And so what a trend line allows you to do is it allows you to potentially predict um, market movement, right? So we're looking at the ability to see something potentially occur in the market and then be able to predict whether we will be going up or down or even sometimes sideways. Okay. So what I want to show you guys here on Tesla specifically is how to create the trend line in Thinkorswim. I'm gonna go ahead and delete it here so we can draw it together. Essentially how to watch and see what a trend line would potentially look like, how we can then be able to create it, and what it would look like to take the opportunity. Okay. So one of the first few things you would want to look for as far as a trend line is concerned is you kind of want to see, okay, is there a specific pattern happening within the market pertaining to what we're looking at for a specific stock, right? And so this chosen stock we're looking at right now is Tesla, okay? And so basically, we talked a little bit about what was happening throughout all of last week and even a little bit earlier than that, where we were potentially trending upwards after um, receiving some news regarding, the war, right? And so what we saw as far as a trend, we started to see that we were going up after coming here. This was on the 9th. Okay, so almost about 2 weeks ago on Thursday, we saw Tesla kind of bottoming out here near the 340 level. Okay. And so what started to happen was we started to trend upwards. We can clearly see that we no longer were within this 340 area. Okay. And so what we would do here is now, actually, before we talk about the uptrend, let's go over this real quick. So What do we see? What kind of pattern are we seeing right here? I want you guys to type it in the chat. What pattern do we see right here based on this point right here, this point, and this point? I want you guys to type it in the chat. Let's see if we're learning here. I want to see if you guys can identify that. Put it in the chat. What pattern are we seeing right here? What pattern potentially happened right here? Go ahead and type it in the chat. Go ahead and type it in the chat. I like the answers. I like the answers here. I like the answers.
Sure.
Yes, yes, yes. So what we're looking at here is we both have a double bottom and a triple bottom. Okay, so if you said double bottom, you're correct. And if you said triple bottom, you're also correct. And also, if you said W, you are also correct because the W pattern is essentially what would be a double bottom. Okay, so that's amazing that you guys are tapping in. So yes, we did create initially we created a double bottom, okay, with these 2 points, right? Which would essentially indicate that we're going upwards, okay? Now, after we created the double bottom, then there was a potential triple bottom here, where essentially the idea of this setup is we're finding support within the market. So buyers essentially did not allow Tesla to get underneath the 340 level, okay? So how you would draw that is you would go to drawings here, you would go to drawing tools, you select price level, okay? And then you basically eyeball it, right? And the idea of eyeballing it really is if you can see the cursor moving up and down, you can see the line that it's looking to create. What you would want to do is you would want to make sure that your line is potentially intersecting with the bars itself, okay? We want to make sure that it pretty much taps the bar. So that's what we're going to do here, okay? Now, what we know is that when we create the price level, this would essentially be what we would call our support because it's at the bottom. Okay, we have what's called support and we have resistance. Okay, support is where we see that the candles are no longer going below the level, and then resistance is where we see the candles no longer going above a specific level. Okay, so that's the difference between support and resistance. Okay, so this is what we were able to create. We're able to create a double bottom initially, and then what would be considered a triple bottom, okay? So going back to earlier, when we're looking at, and also a price level is also a trend line, okay? A trend line doesn't have to look like it's diagonal or otherwise, right? A trend line is essentially a line that indicates a trend, right? So if the trend potentially is we are not going below 340, at least significantly, right? Especially on the larger time frame, then that would be considered a trend line, okay? So just because it's not diagonal, right, does not necessarily mean it's not a trend line. A price level can be considered a trend line because, again, the trend is we're not going below 340. So, considering the idea of not going below 340 on Tesla, right, because we're not going below that level, what we would desire to do potentially is we would desire to purchase what kind of options contract. If we're nearing the 340 level, which kind of options contract are we looking to purchase? Go ahead and put it in the chat. Because we're not going below the 340 level, which kind of options contract would we be looking to purchase? Would we be looking to purchase calls or would we be looking to purchase puts? Put it in the chat. Will we be looking to purchase calls or will we be looking to purchase puts? All right. Absolutely. We would be looking to purchase calls. Everyone is saying calls, calls, calls. Okay. Janice says call up. Okay. We would be looking to purchase calls. Okay. Because essentially what the market is dictating at this point in time is showing us that there is no longer a willingness for the Tesla stock to go down below this trend line, okay, this price level, okay, 340 here. So we would be looking to purchase calls at that point, okay? This is how we become self-sufficient traders. When we're actually able to identify things in the market that allow us to make very strategic decisions, okay? So if you're looking to purchase an options contract at these levels, we're more so looking at purchasing calls, okay? And essentially what our stop loss would be is we would look to see whether or not we actually fall further below this 340 level, okay? So if we believe that 340 is the support, okay, we had a low of 337 here, okay? But with rounding up here, if we were to look at 340 essentially being our support level, we would potentially want to create a stop loss, okay, of what would potentially be about a little bit lower than this 337. So we'd probably say about 335, okay? That would allow us to be able to minimize our losses, okay? The idea of options trading and stock market investing in general is to minimize losses and maximize gains, okay? I want you guys to type that in the chat. Minimize losses and maximize gains, okay? Minimize losses and maximize gains. So if we're minimizing our losses, we're basically saying, okay, based on the education that I've received, I know that at this level, at 340, we expect the market to go up based on the fact that we have what would consider a floor, right? A floor, a support level, which would be at 340, okay? So if we're at 340, we're saying once we get to that 340 level, we would potentially be purchasing calls, right? Because we believe calls means we're going up, okay? And as you can see, after that 340 level, we've essentially done nothing but go up, okay? We've done nothing but go up. And 340 here on the 9th, today's the 22nd, we're now at 390, okay? So obviously purchasing calls at that point in time would have been a great decision to make, okay? We have a question. I love questions. Eric O'Neill says, how long would we have to hold that stock option when we establish that stop loss? Okay, so the idea at this point in time, if we were to get into this trade, right, we would, being that we have the stop loss signified there, our stop loss would allow us to essentially to protect our capital. But as you can see, we never got our stop loss triggered, okay? So depending on which options contract you would have held onto, because each options contract has an expiration date, okay? So depending on the expiration date you would choose, it would allow you to then essentially be able to take profits on your trade, okay? And because we never hit our stop loss, you potentially would probably never have seen yourself at a loss at on this trade, right? Like I said, especially if you were able to get in at the right time, at that basically on or about that 340 level, okay? So how long you would hold the contract potentially depends on how long or how far out your expiration was on Tesla, okay? So if we were going to the trade menu here, right? And we were to look at the different trades that we have, the different expirations, okay? Within these parentheses here, it shows us the different um how many days are left on a specific contract, okay? Now, we do have the understanding that as time gets closer on the contract, that is what actually signifies when the contract gets closer to being worthless. So you would want to be able to sell your contract before the expiration date, okay? So that's what you would want to do. All right, so that's how you would profit on this kind of trade. Now, as we're trending upwards, we obviously know that at some point in time we would potentially start to see an adverse reaction in the market, okay, where we potentially would come down, okay? Now, we were able to top out here at 409.28. Okay, at 409.28, this looks like Friday. This was Friday, okay? So on Friday, we got as high as 409.28, okay? And then on Monday, we didn't get above 409.28, okay? So we created what we call a lower high, okay? So if 409 is a high, if 409 high is a high, okay, for Friday, that would signify that the following day, the following trading day, which was Monday, would be considered a lower high. So we have a high and then we have a lower high. What happens yesterday on Tuesday, we have an even lower high, okay, a lower high than the previous day. This would essentially be one of the first reasons why I would go ahead and create a trend line, okay? Because the trend essentially would be each passing day, we're getting a lower high than the previous day, okay? We're getting a lower high than the previous day. So what I would do is I would go to drawings, I'll go to drawing tools, okay? I would select the drawing tool that says trend line, which is the second row, first column, okay? And I would literally draw at the top. I would have to press my mouse once, and then I'm moving my mouse so that it can potentially touch or graze all of the highs, okay? So it touched this high here, okay? Basically what you want to do is you want to keep all of the data within or underneath the line that you're looking to create, okay? So you would stretch it like this. And this is essentially how I created. Then once I look at the line and consider that, most of, if not all of the data is within these parameters, I would click it again, and that would be how I would create my trend line. So what we're currently seeing now is that most of, if not all of the data is underneath this trend line. Okay. So the trading that happened on Monday, the trading that happened on Tuesday, and the trading that's happening today right now as we speak in real time, okay? Because this is actually happening in real time, okay? We're seeing that essentially the market is respecting what would look like our trend line, okay? Now, obviously we have the market topping out here on Monday. This would still be a part of the trade because what we see is that pretty much once we got above the trend line, the very next 5-minute candle came screeching down, okay, from that trend line. Okay, so the trend line would essentially be valid at that point in time. Okay, so all of the data that we're looking at is within or below this trend line. Now, why that matters is because when we're looking at this trade here, we're essentially saying the trade would potentially go one of two ways. The one way we would know that it's potentially going up is if we were to break this trend line and stay above the trend line. Okay? If we were to break this trend line and stay above this trend line, that's when we would know that we are changing direction. We are changing the trend. Okay? So think about trend lines like the weather, okay? Essentially, imagine that up here we're looking at 80 degrees, okay? Then we're looking at 70 degrees, okay? Then we're looking at 65, right? Over here we're at 60 degrees. Basically it's getting colder and colder each and every day, right? Now, how we know that summer is potentially coming, right? Because I guess this would probably be what, maybe spring, right? How we know that summer is coming is if we can break over this trend line, okay? Because if we break over it and stay over it, that would essentially mean we're changing the trend, okay? So using the same analogy, the weather at that point in time would continually get hotter and hotter and hotter, right? And can potentially go up. So that's what we would like to see, all right? This is how you create trend lines in the market. Now, The same way you can create trend lines as the market is going up is the same way you can create it as it's going down. So this is a trend line where you're looking to signify that the market is going down, okay? This is a trend line to show that the market potentially is going down, or the stock rather, okay? This is how you see that the stock is going down. Now, when you're looking for the market to go up, okay, you're looking at something like this, right? Like this was how we were watching the market go up. Now, how you make sure that how do you know that the market is going up? If we have if we're creating lower high candles, okay? If we're creating lower high candles, I'm gonna quiz you guys on this. This is gonna be a new term, okay? If we're creating lower high candles, what kind of candles would we have to create if we believe we're going up? Type it in the chat. Let's see if we can get some good guesses. If we're creating lower high candles to signify that we're going down, what kind of candles would we need to see if we believe that the market is going up? Type it in the chat. If we need lower highs to show that we're going down, what kind of candles would we need to see if the market is going up? All right, we got a couple answers here. I love these guesses here. It allows us to use our context clues, right? So if we're creating lower high candles, the answer to this would be higher low, okay? If lower high is signaling, right? If we get a lower high candle signaling that we're going down, that would mean higher low candles would mean that we're going up, okay? So what does that mean? A higher low candle. What is that? We have one low down here, and then the next low, guess what this is? This is called a higher low because this low is higher than the previous low, okay? Right? This low is higher than this low, okay? Then we have obviously we have a wicking candle, but the next open candle, right, would be considered what? A higher low, a higher low. So this candle is higher than this low, okay? So if we're going to continue to create higher low candles, right, then that means we're going up. So the cheat code with signaling lower highs and higher lows is whatever the first word is the direction it's going. So if we created a lower high, then what direction are we going? Low, right? A lower high candle means we're going low. That means we're going down. Okay. If we have a higher low candle, that means we're going what? Higher. A higher low means we're higher, right? That means we're going up. Okay. So basically, imagine using the same weather analogy. Imagine this is the winter, right? This is 30 degrees. Then we get 35 degrees. Then we get 40 degrees. We had a high of maybe 45 degrees over here, right? So as we continue going up, now we have a low of 40 degrees, okay? Then we have a low of 50 degrees. So as we're continuing to go up, we're seeing that the trend is that we are increasing in temperature, okay? Using the analogy, we're increasing in temperature. So how we draw this trend line is we're looking to grab the low candles, right, of this trend and then create your trend line that way, okay? So this is potentially what we would look like as far as a trend line of us having and creating lower highs, okay? Sorry, higher lows. Higher lows. We're going high, so it's higher lows. We would look to see that the market is potentially going and continuing to go high. So as we can see, as we start creating the higher lows, most, if not all of the data above this line that we created, I'm going to change the color here so we could look at it clearly. I'm going to make it pink. Okay. As we can see, more of the data is resting above this above this trend line, okay? That's how we can signal how or which direction the market is potentially going into. Okay, when we create higher lows, that means that we are going to continue to go to the upside. All right. All of this information is very pertinent when we're talking about the idea of entering into our trades. We're looking to make sure that we identify the trend. That way, we're making an educated prediction on where we believe the market is potentially trending on the following day. Okay. So, again, we have price levels that are also a trend line. We have actual trend lines, right, that shows us where the market is potentially trending to, whether that's high or low. Okay. And then we have another trend line that shows us how, if we're going down, if the market is truly going to the downside. Okay. And as you can see today, we weren't able to get a higher high, right? We got a lower high. Okay. When we receive a lower high, that potentially means we're going down. So watching the market potentially grab your trend line would be where you would desire to enter into this trade. This allows you to actually have patience, okay? This allows you to have patience when you're desiring to get into a trade. Because if you already signaled where your trend line is supposed to be, okay, that would allow you to then watch the market and use your discretion with being able to enter into a trade. Okay. That's how that happens. All right. Now, again, here's what ends up happening when you have a combination of trend lines. Typically, when you have a combination of trend lines, what happens is we create triangles. Okay. So as you guys can see with what we're looking at here, I'm going to make this one pink as well. We start to create triangles. Okay. So each setup, for the most part, is really a combination of trend lines. If you're watching a triangle, the anatomy of a triangle is just two trend lines. Okay, it's just two trend lines. So at some point in time, when we're looking at two trend lines, we're going to have to break one of the trend lines. Okay, we're going to have to break one of the trend lines. That's the idea of why you're putting your lines on the chart, okay? Because you're going to have to break one of the trend lines. Now, the reason why I drew this price level here is because we started to see some interaction of this being the high over here, of this downside movement, okay? This is also a key level of 390. Okay, so 390 is what I would call a key psychological level, which essentially is usually a round number in the market that usually dictates whether people are going to look to either buy or sell. Okay. Now, what I started to see was I started to see that we bounced off of that level to the upside, right? Every time we get to that level, we start going up. Okay. But then anytime we get near the trend line, we're going down. So basically, what we're looking at is we're looking at the market essentially squeezing, okay? And over a period of time, one of these trend lines are going to give in. We're either going to break this trend line to the downside, or we're going to break to the upside, okay? So that's usually where the opportunity is, okay? Now, if we decide to break one way or the other, we're always going to need to watch for continuation. Okay. And that's what allows us to have more confirmation on this move. Um, I see Adrian has a question or her hand up. What's up, Adrian?
Yes, when you're doing these trend lines, how are you gauging the amount of time, like from 2 days, 3 days, 4 days? Is there a certain amount of time, or are you just doing it because you pretty much know the stock itself? Like, how do we know how to gauge these trend lines, like hourly or? I'm not sure how you're doing it because I can see you started like with Tesla, we were back on the 20th, and
Mhm.
then we went all the way up to like the 22nd.
Yeah.
Like, so how do we know where to start looking at the trend and how far to take it out? Or is it based on the contract that you have?
So that's a great question. So essentially, when we're looking at creating a trend, are you talking about creating the trend line or you're talking about,
Yes.
okay, so when creating the trend line, typically what I look for is I look for the actual formation of the stock itself. So pertaining to this trend line here, um, what I'm looking at is I'm looking at starting right here where we have our high. So we have our high here, and then we have our low from the previous pre-market. Okay. So this is what I'm looking at as far as starting the trend line. Now, there are times where I just allow the trend line to extend to the left side. But for the most part, we are looking primarily at when we have the trend line start here at the top um for the downside. Okay. So because we're here at the top, we start right here and then we start to go low. Basically, the idea is when did we identify that a trend potentially started? Okay, when did the trend start? The trend looks like it's starting when we're at the top going down. So that's why I would signal it here. And I can change this here, but what this would look like is we would actually create a trend line that also starts at that same point as well. Okay, so it's really about looking and watching to see where the trend potentially started. Like, where did it occur? Where did we start to identify where it's going, right? And so that's why I drew it right here. Now, with price levels, usually I may just leave them to go across the screen just because I have the understanding that the psychological levels of the round numbers typically interact with the market in such a way where you start to see that it can also follow through with some of the other trading that happens on the previous days. Um, but if we're just looking at the trade or we're looking at the stock itself, then we're more so focused on where the trend starts. So the trend, at least for going down, it starts at the top, right? So we Thinkorswim already gave us the top here at 409. So this is where we would start, and then on the same day is where we would potentially draw the other trend line, which for this one is going to be the um the price level. Same thing over here.
Okay, so now with these trend lines that you have set, what kind of contract are we looking at? Do you have like two types of contracts put in here with this one Tesla stock, or are we just waiting it out with these trend lines? What's going
Yeah,
on here?
so you have a few decisions to make, right? You can either decide to enter into a contract potentially near the trend line itself, or you can just wait for the breakout, right? So when we create a triangle like this, we're anticipating a breakout. So that would either be a breakout to come down, okay, or a breakout to go up, right? So that would be the idea of this. We could either go down to the downside, right? Or if we break above this trend line, then we would look to get calls to go up. Okay. So that's what we would look for. And there's also typically a retest that happens, right? So once we break, we would want to wait for confirmation, okay, to signal whether we are truly going that direction or not. But then once we get some candles that are beneath or above the trend line, that's when we would want to take action. Now, the best part
Okay,
about
so,
trend lines is that we're then able to also signal our stop loss as well, right? So if we're going below, if we believe that the market is going to go lower here, then our trend line up here would potentially be where we would desire to have our stop loss, right? So
mhm.
that's what we're looking at there. You had another question?
Yeah, so at this point, this is where you're saying we would get into a contract here, is where we would potentially get into a contract and then wait it out to see what's going to happen, whether it goes above or below the trend line. Is
Mhm.
that what you're saying? Or you're already in a contract and we're
No,
waiting it out to see what direction?
so you would potentially wait for the for signals of the breakout, and the signal of the breakout is if we come down, we potentially would get a retest that shows that we would go back up. And then at that point in time, we would then desire to then enter into contracts to then take it to whichever direction we potentially broken the trade with. Right now,
Okay.
another option would be potentially getting in right near the trend line itself. So if we were to get into puts up here, right? If we were to get into puts up here, believing that we're going to go down, then we could potentially set our stop loss right above the trend line itself so that we can protect our capital that way as well. So there's a few ways to go about it. But usually the breakout candle is typically a good idea to wait for so that you can have more confirmation. Uh,
Okay.
yep.
I'm just trying to figure out when you get into a contract, like what's a good time to even get into a contract with all of this up and down going on, up and down, up and down.
Yeah.
Like where do you like strike? Like sniper time. When is it sniper time? We're gonna call that out. When is it sniper time here?
Yeah, that's
That's
good.
what I'm trying to figure out.
So, so what I was referring to earlier was we would need to have confirmation candles below this point, right? Because there's going to be two types of contracts we could potentially look to get into. We would either get into calls or into puts. If we're coming down below this trend line, we would want to
Hmm.
see some candles also come. We would want to see some confirmation after the initial break of this trend line, right? Going down.
Hmm.
Now, there are times where once we do break initially, we may actually retest, right? Where we're going in the inverse direction. For me, I typically like waiting for a retest, right, of a specific trend line break before actually getting into the trade itself. Okay. So the right time
Okay.
to answer your question would potentially be during an actual retest. Okay. When we're to
Okay.
get retest, then that would potentially be where we would look to enter into the trade before it then takes the further, going further down. And vice versa. The same thing for it going up as well. If we're looking into getting a call, we would want to see it come up a bit. We want to see it come back down, test this trend line. If we test this trend line and it continues to go down, that means that that trade is invalid. But if we test this trend line, but then it bounces off of this trend line and goes back upwards, the correct time to enter that trade would be right during the retest before it goes up.
Okay.
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 So yeah, I hope that answers your question.
It does. So when you're doing a stop loss, like
Mhm.
when you were talking about a stop loss and you said you would put like I think it was like at 380 or something like that, and you said you would probably put your stop loss at 385 when it was going down so that you wouldn't lose but so much money. How
Mhm.
do you gauge how much you want to put your stop loss at? Is it a certain number that you use so that you don't lose a certain amount, or you just pretty much gauge it by like how much you definitely don't want to lose? So,
So yeah, so you have
like,
two options. You have two options now. The key thing you want to make sure you remember is that whatever you're putting into the trade, you want to make sure that it's the correct amount that you would prefer to risk, right? Now,
mhm,
that being said, there are abilities for you to minimize your risk or minimize your loss rather, and that's going to be with a stop loss, right? So
mhm,
based there, you can have a stop loss either based off of the chart itself or based off of how much money you're willing to risk or to lose on an actual trade. Okay. So if you're placing a stop loss based off of the chart, then you're basically wanting to make sure of saying, okay, if I've entered into a trade and I believe, let's say you've grabbed puts somewhere, let's say in this area, right? If you grab puts here or you grab puts after a potential retest, you would want to set your stop loss basically right above where you entered into because you're grabbing puts. Okay. So if you enter your stop loss right above it, that's what's actually going to allow you to know that, okay, maybe my entry wasn't precise. Okay. And that's going to allow you to only lose a small percentage of your money at that point. Okay. So that's based off of a chart. That's going to be a stop loss based off of a chart. Now, your contracts is a different point. If you're looking to, let's say you have a contract worth about $500, you can actually create a stop loss that can allow you to only lose a percentage of that amount or a specific dollar amount of that amount as well. So you can put in, let's say your contract is 500, you can set a stop loss for where your contract is at 300. Okay. So that would mean you would lose 200 on that. Or let's say you put in a contract for 500, you can desire to say, okay, I only want to lose 100 on this contract, right? So then maybe your stop loss for your contract itself would be at $400 a contract, right? So you would buy your contract with 500 and then you would create a stop loss at $400. Okay.
400. You're losing 100.
Which should allow you to only lose 100. So it just really depends on your risk management, and it also depends on your confidence level of the trade itself. Okay. If you're trading the chart, if you're making the decision based off of a chart, you're probably more inclined to watch the market or to do things that allow you to automatically get out of the trade based off of how much you've based off of how much the trade has potentially gone um, against your initial position.
Okay.
Yeah.
So someone that's just starting out as a beginner,
Mhm.
does it make sense to do it more so like specify the amount you are willing to lose or to play more so with the chart, like you're saying? Which one makes more sense?
In my opinion, based off of, I would base it based off of the chart.
Okay.
Yeah, I would base it based off of the chart because your initial risk assessment is your initial entry in the first place. Like the amount of money you want to put on the table to start off with, you have to be okay with losing, right? Now,
Right.
now basing your stop loss off of the chart allows you to lose less of an amount that you put in, right? But
Okay.
as far as just being a very principled trader, I would say that it's better for you to create your stop loss based off of a specific price level, which would be based off of the chart and not based off of your contract itself.
Okay.
Yeah. Great questions,
All
Agent.
right. All right. Thank you.
Yep. Eric, I see you have your hand raised.
Yes, sir. With that stop loss,
Mm-hmm.
you have to basically sit in front of the computer all day, or is there a way that you can set up alarm that if it goes up or if it goes down, it'll let you know?
Yeah, so you can do things, you could do a few things. There's a way that you can create what's called a conditional order. And a conditional order actually would say you can create an order that says if for this example, if Tesla stock goes above whatever the number is, let's just say, for example, if Tesla goes above 390, then sell at market price, right? You can do that. Or what you can do is you can actually create an alert on your phone that alerts you if Tesla goes over that threshold, and then you can essentially, log into your brokerage at that time and then initiate the trade yourself. So you have both options that you could be able to do.
And another question, real quick.
Yeah.
Normally, how long? Okay, right now, what did you say the retest phase, correct?
Right now, based off of what we're looking at in real time,
Yes.
yeah, this would be considered a
So,
retest right here.
so then you waiting to see how long, in which direction it's going to go before you would eventually pick up a contract, correct?
Yes, correct.
So once you do pick up a contract, how long do you per se normally hold the contract for?
Well, it
Let's
depends.
say if it was, in other words, if it was you doing this, how long would you hold if you saw it going in the calls direction, right?
Mhm.
How long would you hold the contract for?
So it depends. It depends on the trend of the market. It depends on what I'm looking at as far as the S&P 500 as a whole. I mean, there's a few different decisions that would go into that. But for the most part, if I'm entering into that contract and I see that I'm in profits, at whatever point in time, then I'm more so looking to exit that trade, almost as soon as possible. So, if I'm in profits, there's also ways that um, you can actually trail your profits that will allow you to stay in profit as you after you get into the trade without incurring a loss. There's an ability for you to do that as well within Thinkorswim as well. So um the 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 whole time, it's like I said, it really just depends. If I'm not at a loss, I can decide to take profit at any given time, right? Um, Now, if I am at a loss, I'm not looking to hold the contracts for a long time. If I'm at a loss, for the most part, if it hits my stop loss level, at that point in time, I would desire to exit. So the length of how long you're holding on to the contracts is really just dependent on um, whether or not you are looking to um, hit a specific price target that you're looking at on the chart, or if you're just simply in profits. I'm more inclined to just take profits as I see them. So if I'm in if I'm in a trade and I'm already in profits, then at any given time I'm looking to take my risk off the table.
I appreciate you. Thank you.
Yeah. And Millicent, I'll take you. We're right past one now. Um, I'll take this last question.
Can you hear me now?
Yes.
Okay, so when you enter into a contract, whether it is a call or a put,
Mhm.
that same particular contract, can you change your mind on it, or do you have to start a new contract if you want to change what you are going to be looking for?
That's a great question. So, um, you wouldn't be changing the contract. If you change your mind, you would just exit the contract and then get on the other side, right? So if you got into puts initially, then you would just sell your puts and then purchase calls, right? That's if you were to change your
O-
mind. So there's no way for you to change the actual,
Okay,
yeah,
okay, so we just end one and then start another one.
correct, yes.
Excuse me. So we're not committed to stay in one a certain amount of time before getting out.
As soon as you get into the contract, if you change your mind literally a split second later, you can do that.
Okay, thank you.
Yep, you're welcome. All right, guys, we're right here above, almost at 110 here. I definitely appreciate you guys for today's session. If you guys have any questions, definitely don't hesitate to put it in the trade chat or contact me if necessary. Um, Today was mainly about identifying trends, looking at trend lines, and also how to create them. So I hope this helps you guys out. Let's go ahead and sign out. wants to sign us out for the day. Oh, I see Hervins is here. What's up, Hervins?
I'm here, man. I had a little issue, so I'm back.
No
Had a
worries.
little family stuff, a couple two funerals, so and that messing me up.
I hope everything is well. Let's go
Yeah,
ahead and
yeah, yeah, man,
have you
yeah,
sign
man.
us out for the day, brother.
Well, God is good. Let's keep learning, and then sooner or later, we will get to our destination. This is not like I said, it's not this is a marathon. This is not just a race, just a marathon. It's a daily grind, or it's a Wednesday healthy, wealthy grind.
Absolutely, absolutely. So we're gonna go ahead and sign us out with um our tagline here. Okay. Maybe I think Hervins probably missed that, but that's okay. We're
Thank
gonna
you, thank you, thank you.
yeah, thanks, brother. We're gonna go ahead and sign off with problem solvers don't panic, they pivot. All right. So on the count of three, we're gonna chant that, and then we're gonna dominate, and then we're gonna head out of here. All right, guys. So
Right.
Yes, sir.
on the count of three, one, two, three. Problem solvers don't
Problem
panic.
solvers
Solvers
don't
don't
panic.
panic.
They
They
Pivot.
pivot.
pivot,
Pivot.
Pivot. They
dominate,
pivot.
dominate,
Dominate.
Dominate.
dominate,
Dominate.
dominate, dominate.
Dominate.
Dominate. All right. Thanks,
Excellent,
Rossi.
excellent,
Dominate.
excellent, excellent.
Thanks,
Have a
Great
Amy.
great
class.
All
day.
Great
right,
class. Thank
Thanks,
Thanks,
you.
Thanks,
guys.
Rossi.
Rossi. Thanks,
Thank you,
everybody.
Amy.
Thank
Thank
Coach
you.
Wasi.
Thank
Thanks,
you, Coach
Rossi.
Rossi.
Thank
Thanks,
Thanks, guys.
everyone.
uh,
Thanks,
uh,
Coach Wasi.
Bye.
Thank you.
Have a good one, everyone.
All
Have a
All
right,
great
right.
y'all.
Thank you.
one.
Y'all
Take
have a
You
care.
great day.
too. You too,
Bye.
everybody.
Bye,
Bye. Have a good
everyone.
day.
Take
Have a
care.
good
Bye.
day.
Bye. Bye,
Bye,
Charlie.
everyone.
Bye.
Bye.
Bye.